Dear class, welcome to State and Local Government. In this lecture, we'll talk about how states have dealt with health insurance. So topics in this lecture are the development of the federal and state health insurance programs in the US. We'll look at Medicare, Medicaid, a little bit about CHIP. The Affordable Care Act, or Obamacare, is something we'll talk a lot about. And we'll look at how states have played a role in the development of these programs. So you had some readings to do for these particular topics, and some of you chose one of these to read and to comment on. We're going to look at the first three sets of readings in this lecture. So what type of federalism do we see in the 1930s? We know that dual federalism is an era that typically ended, by the 1880s. It began in the 1780s. And basically, in dual federalism, we saw an entire separation of the powers of the federal government and the state governments. When it came to general welfare, there were some debates over who had rights, but state powers, especially reserve powers, were generally respected by the federal government. 1800s, late 1800s rather, 1880s to 1930s is sort of this transition period when the federal government is trying to figure out how exactly it's going to implement laws on issues which are typically considered to be state reserve powers, especially when it came to regulation of industry and also of general welfare issues. Cooperative federalism comes about in the 1930s. The main argument is, after we've seen the collapse of the stock markets, the banking system, international trade falling apart, all of this happening after World War I, and we see at the state level a failure of states to implement their reserve powers when it came to general welfare issues. And so the central government or the federal government decides that it needs to do something. So we see that particular presidents and other members of Congress become very active at this time. Certain kinds of laws were being passed by Congress to curb the power of monopolies, of these trusts, which are essentially monopolies, right? And we'll see that more as we go through the semester. We're going to go back and forth in time, and we'll get a chance to look at some of this. So cooperative federalism is essentially promoting two ideas. One, that the federal government needs to play a bigger role than it usually does in the lives of people. And two, it needs to start funding state governments because state governments just do not have enough money to do what they need to do with their reserve powers, right? They can't take care of the general welfare of their populations because they just don't have money. And this is something we'll look at, kind of focus a lot on as we move forward in the rest of the semester. In the 1970s, we sort of see a questioning of the scope of the federal government. We see a little bit more conservatism. New federalism is that era when we start to say that state governments need to have more power when it comes to implementing what the federal government is, generally hoping for. So if the federal government is giving you money to engage in, creating public infrastructure for, say, education or healthcare, then the states should have a bigger role in how that's going to be done. So this is the message of new federalism. And so we are really in the era of new federalism. So let's take a look at that. So more questions. So more questions that we're trying to ask are, what kind of federalism do we see in the Affordable Care Act? Of course, we see elements of cooperative federalism. But in general, we see that we are in a much more relaxed space because we have gone through an era of questioning how much power the federal government should have in issues of general welfare. So going back to sort of the older model, and some of you pointed that out in your answers, tending to go towards dual federalism, but cannot really go there anymore, right? So what about Medicare? What about Medicaid? What about the Veterans Administration? Let's look at some of these things, okay? Again, the federalism question, it is essentially about, are state government powers, the reserve powers, can state governments actually use those powers? So states have reserve powers, right? Powers to legislate on issues related to their territories, related to morality issue, related to general welfare, as I have been mentioning. So morality issues is this big thing, and we can see this when it comes to issues of abortion, criminal justice, marriage, gun control, drug use, and you have certain things which we consider more general welfare issues, whether there should be particular types of education, particular levels of funding for education. What about for healthcare? These are sort of general welfare. Transportation might fall under that. But other things which we consider to be morality issues, fall under morality may actually have to do with general welfare. What about, for example, abortion, criminal justice, marriage, gun control? These might have to do with your general welfare as well. Anyway, so let's look at what is going on. So, as I mentioned, state powers under cooperative federalism. This is probably the only time when states are able to engage in welfare. We don't see much infringement of reserve powers until 1920s and 1930s, when it's apparent that the state governments cannot always provide for the general welfare of citizens, right? So we see this entire period in US history when the state governments have all these powers, but they don't do anything, when it comes to welfare issues, right? To make sure that people have education, they have basic labor rights, they have basic health care, civil rights. So the states are falling behind on implementing these things. And in the 1930s, Franklin Roosevelt comes up with this idea, to channel federal money into the state governments, right? And he's saying, look, the states are falling apart. They can't do what they were, given the mandate to do. They're failing. So we need to do something to fix this, right? And so here is a situation of cooperative federalism, where the federal government is working with states. This moment is crucial to understanding the movement to create a national health insurance plan in the US. However, it's not the only moment when the need for a national health care plan arises. Let's examine the steps. So, the history of the National Health Insurance Plan is kind of outlined and in a great way in Gluck and Haberfeld. If you read that, you'll notice they go over the history of the US federal and state health insurance programs. They suggest that the federal government only steps up when it's clear that states can do the job, right? So there's a need for these kinds of insurance. So officially, there's no state or federal health insurance plan of any sort before 1960s. But there were attempts to construct something for a while. The federal government had been paying for hospital fees of military veterans of war after the American Revolution, the Civil War, and after World War I. If you remember the previous videos where we looked at the spikes in the level of federal government spending in the US, we saw it during the war periods, right? And so I'm assuming that some of that expense went into taking care of soldiers. In 1921, the Veterans Administration was established by the federal government to address this issue. So finally, we see after World War One, and Civil War is just 50 or 60 years behind, we see that the US government at the federal level is realizing there really should be an agency that deals with veterans' welfare issues, right? Especially those who are affected by war. Next, in the 1920s, we see the rise of feminist movements in the US, especially related to voting and also related to maternal and child health issues. Congress finally passes legislation and states vote in favor of the legislation to protect moms and children. The Shepard-Towner Maternity and Infancy Act of 1921 comes into play. Congress passes this law. Why do we need this kind of protection? Because we want to deal with maternal health and child health, right? Especially infants, 0 to 5 years old. And we know this is a very difficult, it's a very dangerous time for children. And so you want to protect them, right? The New Deal. The New Deal, sort of breaks open this entire, breaks through this big wall that was preventing any kind of general welfare policy from happening in the US. And so FDR creates the Social Security Act of 1935. That's a huge step. What goes into Social Security, right? Social Security means some kind of protection for individuals in their lives from the government. However, it does not create a national health insurance plan. Why? Well, after World War II, President Truman tries to create a National Health Act, but also fails Basically, what happens is a national health insurance plan is expensive, but also there is the idea that you're socializing medicine. And there's the stigma that if you socialize any process, you must be communist, right? And so at the end of World War II, we see a rise in anti-communist sentiment in Congress. The suspicion that everybody is communist, they're somehow borrowing an idea that originated, you know, in Europe during the Marxist politics, regimes, within those time frames, right? Like in early Leninist Russia or in the 1800s when Marx is writing, right? So these kinds of sentiments scare people. There's this anti-communist scare, Red Scare happening in Washington, right? And this is the Cold War. So all efforts are being defeated. The courts. The courts played some role in the development of the health insurance program. In 1944, the US Supreme Court ruled that insurance was a national commerce issue. Hence, the federal government had a role to play, so Congress could regulate on this issue. But in 1945, and Ferguson Act, insurance is said to be a state issue unless Congress says otherwise. So this is about reserved powers of states. So is insurance a state issue? Who's insuring people? Is it companies that are operating within the state? Are these companies national companies? All of these questions are being asked. Later in 2010, Congress claims that insurance is a federal issue and passes the Affordable Care Act. Hospital construction. So in 1947, Congress passed the Hospital Survey and Construction Act. 1947 is right after the war. You have an influx of soldiers coming back home, many are injured. We have the Veterans Administration, but at the same time, there's a general consensus that you need to have hospitals for low-income households, right? So Congress passes this act and is able to fund hospitals. Employer-based insurance. As I mentioned, insurance companies are playing a big role. 1942, the National War Labor Board puts wage controls, but not on insurance and benefits. It rules that unions can bargain for benefits. So people are in an emergency situation during the war. So a new committee or board was created, the National War Labor Board. They're going to regulate wages during the war. But they decided not to do so for insurance and benefits. And I think they were probably trying to create some kind of national policies or practices to promote the creation of employer-based insurance programs in the US, right? So employer-based insurance is where the employees are all protected under an insurance policy where the employer is paying part of the insurance money. So in 1943, the IRS began to offer. So IRS is the Internal Revenue Service. It began to offer employees subsidies, meaning tax breaks, right? If they enrolled in employer-based health insurance. So if your company that you work for was offering you the option of signing up for health insurance through the employer, then you would get tax cuts for signing up with those plans. And in 1954, the employers were also offered tax cuts by the government. Today, federal government subsidies to employer-based insurance equals $200 billion a year. And this is in Gluck and Haberfield. I'm still talking about that paper. What else is happening? Social Security Act amendment in 1950. So remember that Social Security Act was actually created in 1935 by Congress, right? And it's so the amendment means some changes are being introduced in 1950. So these amendment created or was created to address the lack of a national health insurance program. The federal government begins transferring funds to state governments to cover hospital expenses for individuals, costs to cover hiring skilled nurses and also doctors, all of these types of expenses. States and local governments could allocate resources as they needed. So the federal money was at this time being sent to state governments for these purposes, and now state and local governments could divide up the money as they thought was necessary. Many states resisted the funding from the federal government to avoid being labeled as welfare recipients. So this is very interesting. Kerr-Mills program for elderly care. Now, we see the birth of a semi-Medicare or like the preliminary stages of the Medicare system here. In 1960s, the Kerr-Mills program was established to fund care for the elderly populations that were indigent. So these are people who were unable to take care of themselves, essentially. And minorities were added to this. States got to decide how much they would contribute. So this was a program in which the federal government would provide some money and states could decide how much they would contribute. So more and more cost fell rather on the federal government. However, this didn't go well. The racism and discrimination result, right? So in the South, we had the era of segregation in the 1960s. And so and not just the 1960s, it's continuing despite the major changes that took place in the government, in the uh, Constitution, right? We have the 14, 15, 13, 14, 15, and we have other legislation. These are the amendments I'm talking about, which are supposed to create an equal, sort of non-discrimination when it comes to courts, when it comes to voting, when it comes to educational access and other kinds of things. But these measures were not um, being implemented properly in the South. And other kinds of racial discrimination were also going on in the North. It's not that the North was free of it, but all throughout the U.S. rather. In the case of health insurance, access again was not equal when it came to the Kerr-Mills program. So enrollment we saw was highest in blue states like California, New York, and Massachusetts, but southern states were resisting federal funding because once they took the federal funding, they would have to end segregation, and they didn't want to end segregation, right? And once you took the federal funding, you had no choice. So they resisted. So we know the Civil Rights Act and other kinds of changes occurred at the federal level. There was a major effort to end discrimination based on race, gender, and other kinds of markers. Medicare and Medicaid are introduced by Lyndon B. Johnson. Basically, in the early 60s, John F. Kennedy and Lyndon B. Johnson declared a war on poverty. They looked at the US and said, we have way too much poverty, and all the segregation in the South is maintaining this inequality between the races. And so one class of people are poor, but if you look at who's poor, you see there's a lot of Black people who are poor, a lot of Hispanics. You can't have a country which is, encouraging poverty, right? So basically, when you encourage inequality of the races or ethnicities or of genders, you are basically saying that a large section of the population should be poor, right? Or should be, unequal and not have a good life. And, these younger leaders from the Democratic side, they looked at it and they said, well, this is no way to have an educated workforce who can bring the country up, right? So they had specific goals. I mean, Kennedy and others were thinking about the space, travel to space, and, creation of the NASA programs and other kinds of things. They wanted to take America to a different kind of place than what it was, and all the segregation and racism was preventing a lot of people from joining the trained workforce. And so this had to end. And so Medicare and Medicaid became one way to increase inclusion of minority groups that had been disenfranchised before. So Congress passes the Medicare-Medicaid Act in 1965. Let's take a look at the history. Here we are in the National Archives. It's www.archives.gov/milestone or dash documents slash Medicare dash and dash Medicaid dash Act. All right, so why are we here? We're looking at the document 19, Medicare and Medicaid Act is one act. It's implemented in 1965 by Congress, which is at the federal government level, as you know. On July 30th, 1965, President Lyndon B. Johnson signed the Medicare-Medicaid Act, also known as the Social Security Amendment of 1965. It established Medicare, a health insurance program for the elderly, and Medicaid, a health insurance program for people with limited income. So check this out when you have time. It's an interesting read. Let's go back to our screen. So we looked at the document a little bit, not too much. Let's look at the actual content. So Medicare would cover ages 65 years and older. All right. In 1972, Medicare was expanded to cover people with disabilities. We completely left out an entire group of people that actually need care. In 2003, a subsidy was offered to cover pharmaceutical drugs. So the US medical system, but also modern medicine, basically there is a system in which pharmaceutical drugs are seen as a way of coping or addressing illness, right? And so a large part of people's pocket, expenses basically go towards paying for these drugs. And in this medical system, the doctors tend to prescribe people with illnesses a lot of medicine. And so pharmaceutical drugs are a major expense. And so in 2003, the subsidy that was offered helped people who are dependent on these kinds of medicine, essentially. Medicare is supposedly not a federal program in the sense it's not just federal. States were given power to implement as well. Medicaid. Medicaid was to cover healthcare expenses for very low income households. In 1980, all children up to age of 18 years old were also covered. In 1989, it was suggested that all children under the age of 6 years should be given more coverage under the early and periodic screening, diagnostic, and treatment program. So all these shots that they receive, early detection for different kinds of diseases, illnesses, all of those testing things were introduced. More so, Medicaid required states to offer these services to their populations. So these changes are happening in the 80s and 90s. In the 80s, as I mentioned, we're at a place where the federal government has themselves, under the Reagan administration, started to critique the cooperative model of federalism in the sense of how much say the federal government should have. So you see, there's some pushback happening when it comes to national health care, national policies. So the Clintons, when they were in power in the 90s, also tried to create a national health insurance program, and it failed in Congress. So Hillary Clinton was appointed to play the role of advisor. She was trying to create this health insurance program, but she was viewed as abusing executive authority in the sense, she was the first lady and really wasn't an elected official, and so her role was not welcome. And so there was a lot of pushback at this time. However, after 1997, uh, we see that there was much more pushback. The poorest and most vulnerable groups were taken off the enrollment list for Medicaid. States, however, stepped in to create the Child Health Insurance Program at this time at the state level. After the 1990s, there was a long pause in which we didn't see much change happening. And suddenly we had the Affordable Care Act, which Somers and Gruber starts to talk about, right? So the ACA is an act passed by Congress in 2010 during the Obama years and is often called Obamacare. It essentially expanded Medicare, or rather Medicaid, to households who were unable to buy health insurance in the marketplace due to high cost or premiums. So the private insurance market is what we're talking about. It was too expensive. 31 states and the District of Columbia opted to join. But there were restrictions on who could join. People had to be within 100% of the federal poverty level to qualify. So there's such a thing as a federal poverty level at the household level, right? If you are not meeting those requirements, you can't join. Medicaid expansion. Between 2014 and 2016, the federal government expanded Medicaid coverage to people who were poor, disabled, and elderly. So some people were covered and others were not. So the federal government initially covered 100% of healthcare fees for the newly added population. So whoever was added between 2014 and 2016, the federal government paid for it. But later, the federal government contribution was 90%. So states worried if they would be paying more over the years. We see the election year debates about how much states would have to pay. Congress considered repealing the Affordable Care Act, and you see the Republican uh, senators and congressmen who were running for re-election talking about Obamacare being a major disaster. Impact of Medicaid expansion between 2010 and 2014, 2016. Data from the National Association of State Budget Officers was used by Somers and Gruber, and they looked at data between 2010 and 2015. They see that 11.7% increase in Medicaid spending by the federal government and a 12.2% rise in federal funding. Impact on states. States did not increase spending for Medicaid. Wow, that's a really big finding. States also did not cut spending for education or other programs during this time. At this time, the federal government paid for all expenses related to the new enrollees. In fact, 11 states showed savings during this time due to the federal money transfers. Many southern states still resisted joining. State budgets and spending. States are highly dependent on federal funding. State revenues provided only 36 to 38% of state spending. State revenues meaning taxes, tolls, licensing fees, any kind of business venture the state was involved in, any investments it had, all these earned incomes only accounted for 36 to 38% of state spending in the US. Federal funding accounted for 35% of state spending in states that did not expand Medicaid. So these are states that didn't expand Medicaid. In states that expanded Medicaid, federal funding accounted for 30% of state spending. Other sources accounted for about 28 to 30%. So we see that federal governments are pretty much in the picture for states in the US. States that expanded their Medicare, or rather Medicaid, were less dependent on the federal government than states that did not, right? Medicaid was also the highest category of spending in both types of states and accounted for 22% of their state budget. So states were already spending on something. Whether they expanded Medicaid in 2014, 2016 or not, they already had Medicaid from the 1960s, and they had decided, or based on their population, they figured they had to spend a certain amount, and they did not change that percentage. It was roughly about 22% on average for states. And states spend on average 30% on education for K to 12, meaning from kindergarten to 12th grade and college. On transportation, states spent 8 to 9% rather, and for public assistance programs, only 3%. So this is what states were doing across the board in the US, right? On average. More children and adults, however, were covered. So this was a benefit of the Medicaid expansion. And there was a federal match rate between 50% to 74%, depending on the states. So this is quite a lot of information. One thing we didn't talk about was, what is the federal poverty level? So in 2010, we were looking at households which matched the federal poverty level. In 2014 to 16, we said the federal poverty level, whatever it was, Medicaid would cover families that were making at 138% of the federal poverty level. And here we see with COVID, there was another expansion of Medicaid. And this is, during 2020 that the expansion takes place. And families with household incomes that were up to 400% of the federal poverty level were even covered. Still, hospital expenses during COVID were often much more expensive than that. Let's go to the human Health and Human Services.gov link here. So here we are in the healthcare.gov page. I don't want to use this. Let's take a look. So the federal poverty level, or FPL, a measure of income issued every year by the Department of Health and Human Services. Federal poverty levels are used to determine your eligibility for certain programs and benefits, including savings on marketplace health insurance and Medicaid and CHIP coverage. CHIP is the Child Health Insurance Program. So each state has one. The 2024 federal poverty level income numbers below are used to calculate eligibility for Medicaid and the Children's Health Insurance Program. 2023 numbers are slightly lower and are used to calculate savings on marketplace insurance plans for 2024. We'll talk about what marketplace means. Family size for individuals, meaning one person. If your income in 2023 was 14,580, you were at the federal poverty level or less, right? 2024 income numbers, if you were making $15,060 or less, you were at the federal poverty level if you are a single person filing taxes, right? Now, for a family of two, the numbers are slightly more. For a family of three, slightly more. Family of four, slightly more. So if you were in 2014, and these kinds of numbers were there, you would multiply by 1.38. That would be the number. That is the federal poverty level eligibility, right? Because you'd be eligible if it was less than 138, right? Percent. Now, in 2020, the rate of coverage for Medicaid went up to 400% because of COVID. So if this is imagine this is the number for 2020, and 30,000 for a family of four. Now, that meant that the coverage for Medicaid would be fine if your income was 4 times that. So $120,000, you'd still be eligible for Medicaid. Reason being that the hospital expenses were so high during COVID that this 120,000 would be nothing. Okay, so let's go back to our original page. Let's go to the next page. So here is where we get the other papers by Sommer and Maloney et al. They look at the differences in state implementation of Medicaid. So, who benefited from the American Care Act? We know that families that are at 138% of the federal poverty level, they are covered. These populations were not eligible for any or adequate health insurance through their employers. So these are people who may have been self-employed or underemployed or unemployed. And many of them are working minimum wage jobs, right? So 68 million people were covered by Medicaid expansion. So Somers Maloney, they looked at the red states three red states in particular, Kentucky, Arkansas, and Texas. And they wanted to see how federalism is implemented. Meaning, look, the states have these reserve powers to implement general welfare. They've never really done a good job of it. And so now the federal government has been offering aid to people living in the states. So the state governments have joined in particular ways. So here we'll look at the different ways that states have joined in, basically. States were given options on how to participate. So let's look at Kentucky, Arkansas, and Texas. Enrollment numbers by people were highest for Kentucky and lowest for Texas. What happened in Kentucky? So if you look at the paper, you see that Kentucky was the most, it was most open to the idea of Medicaid expansion. So we saw the state created a state marketplace and allowed individuals to choose from private insurance plans. So it did a few things. Number one, it accepted federal funding for Medicaid. Two, it gave individuals choice to join private insurance plans. Three, it aggressively reached out to the public through the governor's office. So the governor's office had an initiative. They will publicize the federal Medicaid program. They will let people in the state through advertising know about the fact that you could enroll in the Medicaid program if your income was a certain level. States also acknowledged that it was difficult to enroll, and so they hired trained workers and companies to help with enrollment. So navigators might work online, use phones, via email, and were federal and state certified. So they use trained people to walk you through the process. What are navigators? So in 2014-16, federal certification was required for navigators. In some states, more certification and background checks were made. Why? Why would that happen? So these are people who are signing people up to Medicaid. Medicaid is money. It's tons of money, right? Hence, you need the background checks to make sure that they're not signing up some, people who are essentially not real, basically fake accounts or stealing people's accounts and all kinds of fraud, right? So issues about who can have access to Medicaid. Navigators were talking to people about helping them. And so to make sure that people have access and groups are not discriminated against, right? All of that had to be educated. They have to be trained about these things. So all of these suggest that people were involved in navigating. And this was not an AI-led program, probably because we didn't have AI and the level that we have today. It's possible that things will change in the future, right? We'll have more AI and less people. Arkansas. In Arkansas, we saw a federal-state partnership in the marketplace. Arkansas created a program where the state took federal money to allow people to choose private insurance programs. The private option was created. So this was duplicated by other states, but Arkansas was the first state to do so. In fact, 16 states and the District of Columbia offer this private option. However, state legislation limited the state's ability to engage in outreach. So remember that in Kentucky, the governor's office became very involved in making sure there was outreach. But in Arkansas, we see the opposite. In Texas, we see the most opposition, state opposition to federal Medicaid expansion. There were major restrictions on enrollment using navigators. State licensing was required. There was a lot of anti-Medicaid publicity. And Texas has the highest Hispanic population rate than other states. And in the results section, you'll see that the Hispanic population were underrepresented in the enrollment. There were enrollment issues. Let's take a look at what's going on. Sommer Maloney, they actually knew that these things were happening and they wanted to see what happened. So they surveyed people in the 3 states using cell phone and landlines. They surveyed the age group 19 to 64 years, household income less than 138 federal poverty level. Many of these groups reached were minorities, meaning that ethnic minorities, people speaking Spanish and English. Now, their findings are that in general, about 50% of surveyed people in Kentucky had heard about the Affordable Care Act. Most people didn't know there was such a thing happening, that Medicaid had been expanded in 2010. People had difficulty enrolling. Enrollment, however, was highest when people were walked through the application process by a navigator, an expert, as we mentioned, and we saw the highest level of enrollment in Kentucky and Arkansas, where the navigators were used, and 33% in Texas. Despite this, those who applied were able to complete their applications. About 85% said they had a success rate. Of those who had applied a year prior to the survey, about 53%, however, reported being covered by Medicaid. So within a year, they had received Medicaid. 19% said they were covered by Marketplace. So still private insurance, and 18% had both Medicaid and Marketplace. So Medicaid being the federal money. Only 7% were uninsured. So that's pretty good. Within a year, most of these people had found something. Of those who failed to complete applications, however, 68% were uninsured and 14% bought private insurance. So there was still room for growth. Low application rates had to do with fear of cost, though there was no cost to anyone below the federal poverty line, And this is a failure of advertising or marketing by the states, right? The state governments had to promote these sign up or enrollment processes properly, and they failed. So enrollment numbers could have been higher, were not. So publicity-wise, negative ads and positive ads were used to spread the word on Medicaid expansion during 2014 and 2016. More negative ads were identified in Arkansas. So Arkansas people that took part in the survey often identified these negative ads. They remembered watching them. Gender and ethnicity. So the gender of applicants was typically female. These are households at 50% below federal poverty level. The applicants, however, had good knowledge about the Affordable Care Act, or ACA. Most lived in Medicaid expansion states such as Kentucky and Arkansas. Hispanic individuals had the lowest completion rates. Part of this has to do with living in Texas, where they officially opposed Medicaid expansion. So this is the longest feedback I have offered. And the idea for the feedback, or rather the lecture at the end of it, was to give you the overview of the papers that were most important to understand. The other two papers you can read on your own. And this covers basically the development of Medicaid, Medicare, but more so Medicaid as we know it, right? Looking at ACA, which was the expansion of Medicaid and the hotly debated act, the Obamacare essentially, right? Um, but now it's good news to see that Arkansas is implementing, many red states are implementing. So the reason for having this entire lecture at the end is to make sure that you read the papers. And now that I'm giving this lecture, I'm hoping that you'll watch this and things will become clear to you if they have not. So I'm going to stop here, and hopefully you can give me comments about the lecture. So they were not at the federal poverty level. If you're at, say, if federal poverty level is 30,000 and you are at making about 50, you were not eligible before, but maybe now you might be eligible. We're back. Hopefully it opens. All right, let's try to open it. Well, of course it doesn't work now. I'm just going to copy and paste it. Anything at least, okay, where am I? Okay. Here we are. All right, screen share this again. Okay, so we should definitely look at the history in 1 second. Let's find that document and see if it will open. All right. So I tried to open the document and it crashed on me. So let us try this again.